Trump announces plans to impose a 25% tariff on all imports from Mexico and Canada. A Saudi crown prince approves his nation's 2025 budget with a 101 billion rial deficit. And Bitcoin's price falls sharply in the past 24 hours. Welcome to the Economic Bulletin, where we present a comprehensive coverage and expert insights on the latest economic trends and developments. Welcome back. We start off with the United States as consumer confidence saw further improvement in November, driven by growing optimism over the labor market and a rally in stock markets. The Conference Board reported its consumer confidence index rose to 111.7, up from 109.6 in October. This surpassed economist expectations of 111.3, highlighting a stronger than anticipated economic sentiment. The figures reflect a continued boost in consumer sentiment, signaling resilience in the U.S. economy. According to the Federal Housing Finance Agency, U.S. single-family home prices saw a solid increase in September with a 0.7% rise from the previous month, following an upwardly revised 0.4% gain in August. Prices were up 4.4% year-on-year through September, matching the revised figure for August previously reported at 4.2%. However, the pace of growth slowed compared to the second quarter. In the July to September quarter, house prices rose at a 2.86% annualized rate, down from 3.76% pace in the second quarter. Moreover, the White House has said that companies have pledged to invest more than $1 trillion in the U.S. industries such as semiconductors and clean energy during the Biden administration, citing the passage of 3 critical laws in recent years. U.S. President Joe Biden has cited the bipartisan infrastructure law, the CHIPS and Science Act, and the Inflation Reduction Act as helping to push his sweeping infrastructure agenda and to create more jobs nationwide. Biden highlighted the legislative efforts aimed at rebuilding infrastructure, fostering a clean energy economy, and revitalizing U.S. manufacturing after years of offshoring. He emphasized that these investments in emerging industries are securing America's future while creating opportunities for workers and communities that have often been overlooked. On another note, President-elect Donald Trump has announced plans to impose a 25% tariff on all imports from Mexico and Canada starting January 20th. He stated that this measure would be one of his first executive orders targeting illegal immigration and drug trafficking. According to the statement from Trump on Truth Social, the proposed tariffs would remain in place until the issue of illegal border crossings and drug smuggling are resolved. In a follow-up post, Trump announced that the U.S. will be charging China an additional 10% tariff above any additional tariffs on all of the many Chinese products that come into the U.S.
So I appreciate everybody's work, and the spirit is unbelievable. I don't think there's ever been anything like it in our country's history, frankly, because we want to see our country.
In response to U.S. President-elect Donald Trump's announcement, China's embassy in Washington emphasized that neither the U.S. nor China would benefit from a trade war. The embassy reiterated that the economic and trade relationship between the two countries is mutually beneficial. The Chinese government added that it has made strides in addressing drug trafficking as part of a commitment made following an agreement between Joe Biden and Xi Jinping last year. China has reportedly updated the U.S. on the progress of its law enforcement operations aimed at curbing the flow of fentanyl precursors. Mexican President Claudia Sheinbaum has announced that she will send a letter to U.S. President-elect Donald Trump calling for dialogue and cooperation in light of his promise to impose 25% tariffs on Mexico and Canada. She warned that such tariffs could lead to a cycle of retaliatory measures, jeopardizing shared business interests. Sheinbaum also emphasized the potential economic consequences of the tariffs, including inflation and job losses in both countries. Bank of Canada also responded to Trump's tariff announcement, saying that if U.S. President-elect Donald Trump follows through on his threats of tariffs on Canada, it would have an impact on both countries and economies, and that the central bank would incorporate those into the economic forecast. Deputy Governor Reyes Mendez highlighted that the significant impact of these developments on the economies of both the U.S. and Canada during a Q&A session in Charlton on Prince Edward Island. Mendez noted that the bank will monitor the situation closely and begin factoring in the details of any new policies once they are implemented. Joining us from Chicago is Dr. Tariq Rifai, an economic professor, to discuss the latest updates on the U.S. President-elect Donald Trump's proposal of a 25% tariff on all products from Mexico and Canada, as well as a 10% tariff on Chinese goods. Thank you, sir, for joining us here on the Economic Bulletin. Firstly, let's start off by asking, how would President-elect Donald Trump's proposed tariffs on Mexico, Canada, and China affect U.S. inflation and the purchasing power of American households, especially for the working class families?
First of all, it's interesting to see that these tariffs against Canada and Mexico are being imposed despite the fact that there's a trade agreement between the three countries. So this is being used as a political tool to get to other objectives, which is, as you said, the curb the drug trade between the countries. Now, what this does, of course, a trade war is negative for all countries involved. It'll be interesting to see how this affects inflation, because without a doubt, rising tariffs, especially in a country like the U.S., which is very dependent on imports, particularly from China, Mexico, and Canada, its three largest trading partners, will cause additional inflation in the country at a time when the Federal Reserve is finally able to reduce inflation. So what will this do to interest rates, inflation? There's a big question mark there, but without a doubt, I see that this will be inflationary.
Okay, so sir, you talked about the idea that a trade war would be dangerous for these countries, but also how significant will the disruptions of this thing happen to the global supply chains, and especially in the tech sector, if these tariffs are implemented, other than to just, these countries that are proposing the tariffs?
Well, as you know, United States and China are the two largest economies in the world. So when they are engaged in a trade war, you will see some obstacles to the supply chains. And as you know, from our previous experience with COVID, how delicate supply chains are. So any disruption in, say, the US versus China will cause disruptions in supply chains throughout the world. So I think the other countries are watching this closely and see how it develops.
Okay, well, sir, what about how might these tariffs complicate the existing trade agreements between the US, Mexico, and Canada? Could this complicate matters between these countries?
I mean, it clearly violates the trade agreements between Canada and Mexico. There is an established trade agreement, and of course, the U.S. is dependent on trade flow between these countries, especially with Mexico on the manufacturing sector. So I think that I would expect that Canada and Mexico, if they cannot resolve this before Trump implements these policies, they will have to file a claim with the World Trade Organization.
Sir, could we see some sort of shift in global manufacturing as companies look for other alternative markets than the U.S. market, since, President-elect Trump is deciding to impose tariffs on other countries? Will other countries also try to find other markets?
It's not so easy to find other markets, and the U.S. is by far the largest market for goods And this is why China and US are the largest trading partners amongst each other because of this. So, the trade war, it depends on how long it lasts. If it lasts a few months, if it lasts a year, I don't see it having any major long-term effects. If it lasts longer, then yes, of course, you will see shifts, major shifts. But in the short term, I don't see any changes. I see matters being trying to be resolved politically and trying to be resolved without having great effects on either economy.
You talked about the idea, that trade wars, depending on how long they last, it may affect supply chain and all of that. But both China and Canada have also indicated they may retaliate against these tariffs. What do you think are the consequences or the likely consequences of such retaliatory action?
Well, similar to what we saw last time Trump was president, he started a trade war with China, and of course it caused escalation in raising tariffs on an increasing amount of goods on both sides. And of course, it was negative to both sides. And we can say that the U.S. benefited from this because what it caused and what Trump was trying to do was to get more U.S. manufacturing companies to manufacture back in the U.S. And I think we saw some success, and we saw some success in having other countries, especially in the tech sector. Samsung, for example, Samsung during this time made a huge investment in chip manufacturing in Texas. So I think Trump is looking at this as a win, and he tries to see this as trying to attract more manufacturing to the U.S., and this is one of his policies.
Okay, sir, is there a way to mitigate the potential negative impacts or effects of these tariffs without jeopardizing the intended goals of addressing issues like, illegal migration or immigration and drug trafficking? Because you said that the reason for these tariffs are basically unrelated to actual trade.
Yeah, the primary objective is to try to tackle the huge illegal immigration into the U.S. and of course the drug trade. And as we saw, trying to resolve this politically is taking a long time, and I think Trump has seen this as a frustration, and he wants to resolve matters quickly. So of course he resolves to having an effect where each country will feel the pain almost immediately, which is trade. So of course, if they don't want to see a trade war, then they must find a way to resolve the illegal trafficking of human trafficking as well as drug trafficking. So I think this is the main objective. However, this is unique, and I haven't seen this being done before.
Okay, thank you, Dr. Tariq Rifai, an economics professor joining us from Chicago. Thank you so much for your insights. And now we move to the latest economic developments from all over the world. The G7 hopes to begin distributing funds from the $50 billion Extraordinary Revenue Acceleration Loan Initiative for Ukraine by the end of 2024. The initiative, funded through future revenues generated by the immobilization of Russian sovereign assets, aims to address Ukraine's urgent economic and reconstruction needs. The announcement followed a two-day meeting in Fiuggi, Italy, attended by Ukrainian Foreign Minister Andrei Sybiha. The European Central Bank will keep cutting interest rates as inflation falls and as it focuses on slowly shifting to growth, which is proving fragile. ECB Vice President Luis de Guindos indicated that concerns have shifted from high inflation to economic growth. Speaking to a Finnish newspaper, the president noted that the central bank's monetary policy direction remains clear, stating that if projections are confirmed, the bank will proceed with making its policy stance less restrictive. According to the Office of National Statistics, the UK economy grew 0.1% in the third quarter of this year, lower than both the previous quarters and market expectations. The UK economy barely grew between July and September, with uncertainty about the budget being blamed for the weak growth. The marks are a sharp slowdown from the 0.5% growth seen in April to June. German Economy Minister Robert Habeck has emphasized the importance of addressing U.S. President-elect Donald Trump's tariff announcement, urging Europe and Germany to engage in discussions to prevent a potential trade war.
Nein, ich kenne nur die Aussagen von Donald Trump aus dem Wahlkampf zuvor und will deswegen auch nicht spekulieren, wie das weitergeht, wobei natürlich die Entscheidung der letzten Nacht möglicherweise einen Hinweis geben, dass das alles sehr ernst gemeint ist. Erstens muss die EU darauf geschlossen reagieren, sich nicht zerlegen in 2 oder 3 Länderblöcke, sondern als Europa gemeinsam sprechen. Zweitens, das hat Herr Russwurm richtig dargestellt, deutlich machen, dass am Ende alle verlieren. Also die USA, der Wirtschaftsraum der USA und Europa.
Japan's service sector inflation remained near 3% in October, suggesting increasingly favorable conditions for a potential interest rate hike by the Bank of Japan. The Services Producer Price Index, which tracks the prices that companies charge each other for services, rose 2.9% year-on-year in October, up from 2.8% in September, according to the BOJ data. Key contributors to the rise included higher costs in machinery repair, accommodation and construction services as firms passed on increased labor costs amid rising wages. In the MENA region, Egypt and Spain have signed 2 grant agreements worth €800,000 provided by the Spanish Agency for International Cooperation to fund 2 projects in Egypt. The first is a €500,000 grant to support a wastewater treatment and reuse project in Egyptian sugar factories aimed at improving water quality, reducing pollution, and ensuring sustainability by reusing treated water. Second, a €300,000 grant will fund the second phase of the Youth Employment and Entrepreneurship Creation Project. The project aims to increase income opportunities, employment and self-employment for young people. Saudi Crown Prince Mohammed bin Salman approved the country's budget for 2025 with a planned deficit of 101 billion riyals. Total expenditure for 2025 is projected at 1.285 trillion riyals, which is the same as projected in September and likely to equate about 30% of GDP over the next 3 years. Total revenue is expected at 1.184 trillion riyals. The deficit is in the line with a preliminary government projection made in September and would equate to about 2.3% of gross domestic product. The Saudi Minister of Investment Khalid Al-Faleh has announced that Saudi Arabia's GDP has grown by 70% since the launch of the Vision 2030 reached $1.1 trillion, with half of it attributed to non-oil related economic activities. The minister made these statements at the 28th World Investment Conference in Riyadh. He stated that foreign direct investments in Saudi Arabia increased 3-fold compared to pre-vision levels, with the number of registered international investors increasing 10-fold. The head of the International Energy Agency, Fatih Birol, indicated at a press conference in Norway on Tuesday that oil and gas supplies will remain plentiful, with oil markets expected to be stable this year and next unless a major geopolitical escalation occurs. Birol noted that barring significant geopolitical disruptions, oil and gas markets will have ample supply in the coming years. According to a previous agency report, global oil supply is set to exceed demand in 2025, even if OPEC Plus continues its production cuts. This is largely due to increasing output from the United States and other non-OPEC producers, which is outpacing weaker demand. U.S. oil and gas producers are expected to maintain a cautious approach to production levels under President-elect Donald Trump, with companies prioritizing financial discipline over rapid expansion. According to a senior ExxonMobil executive speaking at the Energy Intelligence Forum in London, significant increases in production are unlikely. The industry remains focused on ensuring economic efficiency and maintaining operational quality, which is expected to naturally limit the pace of growth. Oil prices edged higher as investors took stock of a potential ceasefire between Israel and Lebanon. Brent crude futures rose 0.6% to $73.44 a barrel. U.S. West Texas Intermediate crude futures were up 0.6% to reach $69.38 a barrel. Gold prices edged up, easing safe haven demand after reports of a possible ceasefire between Israel and Lebanon. Spot gold was up 0.3% at $2,633.99 per ounce. U.S. gold futures was up 0.6% at $2,634.10. Global shares fell as concerns grew over President-elect Donald Trump's statements about imposing sweeping new tariffs on Mexico, Canada, and China. Upon taking office in the United States, the S&P 500 rose 0.3%. The Dow Jones Industrial Average lost 0.4%, while the Nasdaq was 0.6% higher. In Europe, France's CAC 40 declined 0.9%, while Germany's DAX slipped 0.6%, and Britain's FTSE 100 shed 0.5%. In Asian trading, Japan's benchmark Nikkei 225 dropped 0.9%, South Korea's Kospi dipped 0.6%, Hong Kong's Hang Seng inched up less than 0.1%, and the Shanghai Composite fell 0.1%. Bitcoin's prices has fallen sharply, and as a 5:55 a.m. Eastern Time, Bitcoin was trading down 6.2% at $92,446.38, with its current value at $92,410, and Bitcoin reaching a fresh high of above $99,000 last week in a 46% increase since Trump's win in the U.S. election. The overall market capitalization for cryptocurrencies decreased by $182 billion, bringing it down to $3.35 trillion. That's all for now. Here's a roundup of today's key headlines. Trump announces plans to impose a 25% tariff on all imports from Mexico and Canada. The Saudi Crown Prince approves his nation's 2025 budget with a 101 billion rial deficit. And Bitcoin's prices fall sharply in the past 24 hours. That's all for today's Economic Bulletin on Q News. Stay connected for more news and updates.